Welcome to MTRS_Market Pulse. Today, August 14th, we are covering the top 5 Indian stocks making the biggest moves across auto, telecom, energy and power, banking and financials, FMCG, one standout name from each sector. Let us break down today's biggest sector movers, one at a time. First up in auto. Tata Motors plunged -4.46% to 334 Indian rupees in a significant session. Equity markets are responding to reports that JLR profit falls 69% as supplier fire, Middle East conflict hit quarterly sales. Automotive news. Jaguar Land Rover order bank and production volumes are the earnings swing factor. Range Rover and Defender remain sold out in key markets, which is a strong near-term pricing signal. JLR balance sheet deleveraging is ahead of schedule. Watch for any semiconductor supply update that could unlock further production. Moving to Telecom, Bharti Airtel climbed plus 2.73% to 1,992 Indian rupees. Equity markets are responding to reports that strong RE earnings lift S&P 500, NASDAQ as inflation data calms rate hike jitters. Kitco. From a momentum perspective, the next key resistance for Bharti Airtel sits around 2,111.52 Indian rupees. A sustained break above that level could attract further institutional buying. The main risk to the upside scenario is a shift in macro conditions or central bank tone. This is our analytical view. Always do your own research. Moving to energy and power. ONGC is down -1.90%, trading at 235.35 Indian rupees. This comes as S&P 500 ends higher as CoreWeave results fuel RE optimism, adding pressure to energy markets. After today's weakness, the 228.29 Indian rupees area is the first meaningful support level to watch for ONGC. A stabilization there would be the first sign that sellers are losing conviction. This is our analytical view, not investment advice. Moving to banking and financials. SBI dropped sharply -1.62% to 1,065.50 Indian rupees. Equity markets are responding to reports that RBI proposes new rules to standardize loan rates for borrowers. The Yono digital banking platform is building a retail liability moat. Corporate loan book quality, the historical weak spot, is now at decade-best levels. The dividend policy has become more generous. Watch for any RBI guidance on priority sector lending norms that could affect cost ratios. Moving to FMCG. Hindustan Unilever is trading lower by -0.95% at 2,072.10 Indian rupees. Equity markets are responding to reports that strong RE earnings lift S&P 500, NASDAQ as inflation data calms rate hike jitters. Kitco. Hindustan Unilever is in a consolidation phase, a pattern that can precede a significant directional break. Watch the 2,113.54 Indian rupees resistance and 2,030.66 Indian rupees support as the boundaries of the current range. Now let us zoom out to the broader macro picture for Indian markets. The rupee is weakening against the dollar, trading at 95.43, which matters for import and export-heavy sectors alike. Foreign institutional investor flows remain the key swing factor for Indian equities in the sessions ahead. Before we wrap up, here is your watch list for the sessions ahead. Keep a close eye on central bank speakers and rate commentary, and key economic data releases. Any one of these could be the catalyst that defines the next major directional move. Thousands of investors rely on our daily briefings to cut through the noise. If you are finding value here, please like this video and subscribe. It directly helps us keep producing this content every day. Leave a comment with your market view. We feature the sharpest takes in future videos. Thanks for watching MTRS_Market Pulse. Nothing here constitutes financial advice. Please conduct your own due diligence. Good luck in the markets, and we will see you in the next video. That is today's top 5 Indian stocks from MTRS_Market Pulse. Subscribe for daily sector-wise coverage of Indian and global markets.